Good morning, everybody. Welcome to the Game Plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So we just got the CPI data out. It came out in line with estimates. We'll go over those numbers in just 1 minute. Markets are breathing a sigh of relief. There was a lot of chatter that this number might show a bigger increase than expected in inflation that then put up with Trump's proposed policies of deportations and tariffs could be even more inflationary. We're not seeing that today, and the markets initially are happy about that, going up just slightly. We have big movers in Spotify and Kava. We have Bitcoin trying to break the 90,000 level. Let's get right into the action. So follow me over here. Let's take a look at the S&P 500 to start the day. We basically have the markets. This is where we closed yesterday, right? So we closed right over here yesterday, and we're trading just slightly net positive. But you can see that overnight, we were trending down, right? So the markets were getting nervous about this inflation data this morning, and they were trading down. And then when the numbers came out, this is exactly in line with forecasts, 0.2% month over month, 2.6% year over year. The initial reaction was a relief with a pop, which is now fading just a little bit. But ultimately, again, this gets us through this inflation data and basically kicks the can down the road and says, okay, we don't have to worry about that for now. We'll worry about that next month, for instance, when the next CPI data is released. We'll see what happens. But again, you can see net positive. Here's where we closed yesterday. And again, just slightly higher on the day to get things started. Now, just to refresh our memories, looking at the S&P on the daily chart, we have these trend lines that continue to be resistance right up in this range, all right? So again, we have our resistance here, which is right over 6,000. We've seen the pierce of 6,000, which was the low end of my target that I gave you guys as much as a month or so ago. We've pushed up into that. It's gotten rejected at this point, but the question is, can we push back above it? I don't think today is likely to happen unless we get a big surge, but it's possible in the coming days or even weeks that we could still get to that high end of the target at 6,100. But again, look at how the trend line is keeping price under wraps. And even with the slight gain today, we're not going to be above that, at least as of the open. So it still is resistance, all right? Now, again, I was looking at some of the bigger tech stocks out there, and I have to say, some of them look like they still have some upside. We've talked about NVIDIA maybe going to 158 before it fully tops out. We'll go over a few of these other mega cap stocks in just a minute. All right, back to the charts we go here. Let's take a look here at Spotify, which is having a big move today on earnings. Now, this is where things get tricky as a trader, because if you're looking for a level to short today and you zoom out on this chart, what essentially you're seeing is that you're in uncharted territory, right? Even if we go to the monthly and just kind of zoom in on this, right? You're way up. And by the way, incredible run on Spotify, only a few down months on the monthly chart. And we're now trading, again, if we go back to the intraday, we're trading around 455. So that's all the way up here. Right? And again, I was doing so many trend lines, connecting highs, connecting lows, and there's really nothing up here. So what do we do in these situations? And this is a great point, right? So a lot of retail investors, what they'll do is say, oh, it seems like it's up a lot. Let me just short it, right? No, 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 no. If you don't have a signal, you stay on the sidelines. Now, listen, the way you have to think about it is we may not have a trend line at this point that's being a resistance point that price could get into, but if we get an intraday 10-minute or hourly topping tail or engulfing reversal candle or some other signal, that can be the signal that as a technician you use to go short at that point. But right now, I don't have any levels, and again, I'll let you know as soon as I do. Next stock, again, another monstrous mover here. This is Kava. Look at this move here, guys. If we go to the pre-market, it's trading up from closing yesterday. I think it closed yesterday around 145. It's at 168 right now. This is, again, that fast food or fast casual restaurant. But one of the things to look at here, see this trend line here? This one, again, is upwards of, let's bring this down a little bit, it's around 160. What I'm curious today is, do we close above it? Now, if we look at the intraday, right now we're at 168. But during the day, do we sell off and close back below that? That would be a topping signal if this longer trend line here that goes all the way back to December of 2023, almost a year ago, if we get that. Now, just to put this in perspective, incredible run on this. If you take the 1 year ago lows in December and we go to where we're currently trading, over a 400% gain on the stock. In fact, I have to move it up a little bit more right there. 425% move. Now again, in my world of technical investing, that's a little bit overdone, but again, we need to see the technical signal that reversal is beginning. My guess again is you'll probably have a sell the news event. Maybe it holds up today and starts to fade in the next couple days like Carvana did, but we just need to look for those technical signals. All right, on to a couple other charts here, guys. I wanted to go into the Magnificent Six. We talked a lot about Tesla recently. Take a look at Microsoft. Microsoft's one of the weaker charts out there. Look at these parallels, and look at how price, again, bounced in between the parallels, then broke, and then is meeting resistance right here. Here is your upper level of resistance of the parallel up here, hitting, going up, and breaking down. And so the point being here is that this chart is generally more bearish on Microsoft. However, if we go to NVIDIA, NVIDIA still looks reasonably good, and if we zoom out on it, it still could be headed up towards 158. If we look at Google, Google's not a bad chart either. If we bring it up, you can see this trend line holding amazingly well. So this is your one to beat. If this is ever going to become a bearish mover to the downside, it has to take out this 160 level here. Until then, we might head up towards double top. Looking at some of these other ones, let's take a look at Amazon. Amazon's one of the more bullish ones. They had that big move on earnings. Notice you're still in this bigger parallel, and you're building what we would call a bullish consolidation pattern. That means that you could be headed up towards the high end of the parallel before finally having a bigger move to the downside. So just keep that on your radar there as well. And then Meta. Meta had some kind of weaker earnings. This one's still in a parallel, but you can see again, resistance would be up here. So it could go as high as around 612 or so before hitting that high end of resistance. And then you start to expect a bigger move down, maybe early next year on the chart of Meta. All right, into Bitcoin we go, guys. You guys know the level we've been watching here. We are still right into it. Take a look. Here's your high pivot from 2021, your secondary high pivot in 2021. And if we zoom in on this, look at how we're just hovering underneath that. Incredible. And again, just to go over it on the big board here, guys, for everyone to see, we can clearly see huge move up from about 65,000 here to about 90,000. But notice how the trend line is starting, it's working at this point. But the more time you spend hammering on that trend line without a bigger pullback, the weaker that trend line it becomes. So right now it is still resistance. We need to respect it as resistance. But again, if it continues to go sideways like this, what is that building? In technical analysis, an up move like this, right? And then sideways consolidation, that's a bull flag pattern. Now again, what you have now is only two sideways candles, right? 1, 2, that is not a bull flag. It's basically what I call an immature pattern, meaning it hasn't matured yet into what it needs to be bullish. But we want to keep an eye on this. If this just hovers for the next few days, then it will start to take on a bearish tilt. Now again, the other option would be a rejection where we get a much bigger pullback, and then you'd look for a pullback. Where would you go, guys? You guys know the answer to this if you've been watching. You would go back to the scene of the crime, which is your previous all-time high at 74K. Right, 74,000 approximately. That would take us down right into this area here, and then you look for that bigger move. So right now, as long as we hold 74K on the downside, the chart of Bitcoin remains bullish. It's just a matter of, is it going to make a bull flag and break out, or is it going to pull back here before it makes that next move up? Both are fine. We don't know which one will happen at this point in time. All right. Back to the charts we go here as we come back here. And again, Bitcoin did push up on the back of that CPI data. Gold today, guys, is pushing up just a little bit as well. Not much of a move here today. Now, just a heads up, I did cover the rest of my short on gold yesterday. Even though it didn't tag the downside support, the key is this, and I explained this to my members of my Smart Money Commodity Service of why we got out. First of all, we made over 10% on that second half. So it was a great trade on gold on the short side. But the idea is you have to take into account how much your risk versus reward is left. So if we go back to the charts here, we basically had this much. We covered it right here at the lows here yesterday. So we had another maybe 1.5% possibility of making money. But at the same time, who's to say this doesn't bounce back to your midpoint, which would actually cost us 5 to 6%? All right, so the idea being is that even though we didn't hit target, you have to start evaluating and saying, okay, how much am I up on the trade? How much left can I squeeze out of the lemon, right? How much juice is left in that lemon? And what's my risk of it going against me, just even back to a former support / now resistance level? So that's how I make these decisions, folks. And again, really, really interesting to kind of understand when you're going into these type of things that you have to look at not just the charts, but also your risk versus reward that is remaining. The more it sells off, the more that rubber band is being pulled, that at some point it snaps back, right? So how much more can you pull that to get a little bit more juice out of that lemon, let's say, right, before it snaps back on you, or does it snap back before if you're waiting for that exact target price? So again, these are all things that a pro trader, pro investor is always analyzing when they're looking at charts and their positioning. All right, one of the things I wanted to show you guys, take a look at this. This is the chart of SSYS. About 2 weeks ago, I highlighted this chart to you guys. Stratasys, I said it was a 3D printer. They could get in with AI. The chart was ridiculously low. They make $500 million in revenue. The market cap is less than $1 billion. It was basically my favorite pattern. This is the same one that Wolf ran 100% on. Look at this. Broke out, consolidated. This is where I alerted you guys to it right down here. And I said, guys, look for this to turn up. Well, they reported earnings this morning, and the stock is ripping on earnings now north of $10. Again, if you did happen to take it, congratulations. Again, it was already up for us beautifully from the $7 to $8 alert, but now it's again north of 10. Now, where could this go in terms of technical analysis? We're looking at probably a level here. I mean, you have a little level around 1030, but really I could see this easily getting up to, I don't know, maybe $13, $14. That would be a big resistance there. But these patterns, folks, are so, so good that you have a quality name getting beaten down. Small caps are getting lucrative in terms of people wanting to be in the IWM, the Russell. You get the breakout, the consolidation above the breakout, and then the move to the upside. And that's the beauty of it, folks. So again, interesting little chart. Focus on that one. All right, let's quickly go to silver now and just take a look at what we have on silver. Silver is inching back up just a little bit on this CPI data, but it's still struggling to get back above this trend line here. I still am looking for a buying opportunity down there. Keep an eye on palladium, guys. Palladium, it is again down to support number 2 down here. It is looking very intriguing for a short-term bounce. And then if we look at oil today, oil continues to be a little on the weaker side. Remember, all I'm caring about right now is that $65 support level, which it is just above. It's trading at $67.50. Natural gas, let's see what that's doing today as we bring up natural gas here, and it is pulling back, so it's still respecting this little bit of resistance. All right, so when all is said and done, folks, we have a lot going on this morning, but at least those numbers, those economic numbers, came in line with estimates. Again, as we inch towards the end of the year, we get closer to holidays. Can they keep the market afloat into the holidays? And then what happens as we get closer to some of these big changes in policy as Trump takes over as president in late January? And these are all things that we're going to have to navigate through. Ultimately, I will be giving you the technical analysis. Remember, technical analysis is supposed to be unbiased. It's supposed to be based on charts. It's based on probability. It's based on human psychology versus social media, mainstream media, and all those others that are spinning narratives and hype. So the idea is that if we follow the charts, we won't win every time, but we can win a high percentage, essentially being the casino versus the gambler. And that's the goal here. I just want to be the casino. Just make money consistently over time, build that wealth with you guys out there. Thank you guys so much for coming to view Verified Investing here and check out the game plan. I'll see you later today for Trading the Close. Take care.